So today we are conducting a webinar on with our esteemed panelists on the wrongdoings in the startups and how investors can be protected in certain situations. So we have our team from Saket from Kroll and Amit from ENY. So why don't we start with the introductions? So Saket, if you can start with your own introduction, followed by Amit.
Okay, thanks, Diwakar. Hi, good evening, everyone. First of all, it's a pleasure to be here. Just a quick round of introduction. I'm a managing director with Kroll. Kroll is a global consulting firm for those who don't know. I'm based in Singapore, looking after Southeast Asia. In my period that I have been, I've been doing forensic work for the last 15 years now. Prior to joining Kroll, in fact, I was with EY. Amit is a dear friend for 11 years. I have got, quite a bit of opportunity of working in the startup space. I have worked quite a bit with investors, including private equity firm, VCs, and so on. So today, happy to contribute in terms of what we see in India and also in Southeast Asia. Yeah.
Thanks, Saket. And Amit, how about your introduction for our
Sure. Hi, everyone. Good evening. It's a pleasure to be here. So I'm Amit Rohane. I'm a partner in the Forensic and Integrity Services practice of EY India. As we know, EY is one of the big fours. And I lead what we call as transaction forensics for EY. So when I say transaction forensics, it encompasses everything, right from background checks, the forensic diligence, the bribery corruption diligence, and then post-investment, setting up governance mechanisms, and if God forbid things go wrong, looking at transaction disputes. I have about 20 years of experience in the forensic space, with most of it concentrated around pre-acquisition due diligence. And I worked on some of the largest transactions in the country, as well as worked on many startup-related transactions, because nowadays there's a lot of interest and involvement around the startup startup transactions. And I'm a chartered accountant, a certified information systems auditor, a certified fraud examiner by profession, and have had experience working in various geographies like in India and in the US. So that's me, and I look forward to this interaction.
Thank you, Amit. I'm sure we'll hear plenty of deep insights from you during our webinar. Ankur has joined us, so from the investors and as well as from the forensic background. So Ankur, why don't you introduce yourself to the audience?
Thanks so much, Diwakar. Great to be here, and obviously love the fact that Amit and Saket, folks I've known for many years and worked alongside in some of these matters, are also on the panel. And I used to be on that side of the fence up until recently, but now I'm a managing partner at a fund called KPR Investments. Largely, we are a C2 Series A early stage tech focused fund, and really just quite confident about the ecosystem as it evolves now, and this, in our view as investors, is going to be the golden age for Indian startups. This topic as itself, I think, quite relevant because this has obviously been one of the things that has been spoken about quite a bit over the last 6-7 months, and even when we have conversations with people who are investors, I think this is one of the topics that comes up. So I think great to be on this, talking about something that's very relevant today. And again, as I said, great to have Saket and Amit as people to talk through about this.
Same here, Ankur. Good to see you.
Yeah, same here, Ankur.
Radhika?
Yeah, so welcome everyone, and very excited to begin this conversation. Starting with Saket, I'd like to ask you as to what are the acts that lead to startups, doing getting into these wrongdoing practices. Why do they even get into it? What is the pressure on their head that makes them do it?
Okay, so slightly, I know the topic is on this startup, but just I want to try and change the narrative here, right? So I know that in the last 6 months, there has been a lot of noise when it comes to startup and frauds in startup. But my dear friend Amit and I, we do a lot of work generally on forensics on the non-startup space as well. Means if you go and look at generally global statistics, right? It is not that frauds are not happening in other sectors or in established companies. So a lot of times, the media picks up startup as a story to publish, and suddenly you think that this is the only sector, this is the primary sector where frauds are emerging or governance issues are coming. But I would say, based on what I see in Southeast Asia, what I see in India, and this is again, ACFE as a body itself. ACFE is the Association of Certified Fraud Examiner. In this latest report, and they cover primarily established companies. They said 80% of companies said that they have seen a massive fraud happening in their companies. 80% of the respondents said in the last 2 to 3 years. So again, while I know the overall theme is on startup, I just wanted to first set that perspective right for everyone, that it is not just this space, it is general ecosystem. And overall, right, COVID, controls have went weaker. There was segregation of duties issues in every company. So I would say, just to set that context, that it's not just the startup space. To address your question, Radhika, why probably, at least now, if I just look at what happens in startups, based on my experience, what I've seen is generally startups, obviously they are small when they have the fire, they want to do things and so on. So at the structural level, sometimes these companies, when they are becoming big, they don't focus too much on their, the pillars, right? The pillar could be on controls, pillar could be on governance, pillars could be on, processes. Everyone obviously is looking at investors, seeking, funding and so on. So a lot of time that gets missed. And once suddenly, it's not that, tomorrow when I become large, then I will look into this, So sometimes the element of chalta hai sort of stuff, comes in as well. And it becomes difficult to change the culture, because if someone has grown over a period of time with weak controls, weak governance, suddenly after you do a series D, you cannot say, okay, from tomorrow now, everything has to be right. So it is a process which I have seen that probably that is one of the reasons that a lot of things happen in startups, what we see.
Got it. And Ankur, since you are now into the startup ecosystem fully, which sectors are you seeing, getting into this kind of situations more? I know EdTech is known in the market for a couple of reasons, but apart from EdTech, do you think that consumer tech, which you're focused on right now, is also one of the areas where there could be wrongdoings?
So I think I'll just extend the narrative that Saket said. I think it's unfair to paint either the sector, the stage of companies, with the same brush, right? I think this is if so, fraud is really a mindset. It's a mentality, and it then pervades, across the organization. It could be at the highest level. It could be, mid and lower as well. So I think it's wrong to say that it is one sector, one stage. I think it is pretty much pervasive across some of the largest companies have had frauds, in multiple parts of their business. So I think it's wrong to sort of make it a very pervasive, aspect. Again, the ability to commit fraud exists across all businesses. It's a factor of, mindset. It's a factor of weak controls. It's a aspect of process, etc., lacking as well. So I think that, I would really say that I think it'll be wrong to put it into one sector or the other. I think it's pretty much pervasive across. The way to, and I'll tell you, as from an investor point of view, the way we think about it, whether it's early or late, but more so in the early side, which we are part of, and where a lot of the news making issues have happened, really, right, have been businesses that have been young, early investments, where the large part of deal making is primarily built on conviction on the founder, conviction on the space, and you believe that these businesses can scale with this type of founder, and therefore, as investors, money is going in behind. At that stage, there is very little that you can do about controls or processes or really diligence, except maybe a founder diligence, because the companies are as young, as they are. The challenge actually, and Saket briefly touched upon that, but I think it's more about the process of scaling, the process of how rapidly these businesses grow. And I think that is where intentionally or unintentionally things tend to happen, which sort of result in some of the situations that that we are seeing. So maybe we can talk about that a little later as part of this discussion. But to your point, again, I would just say it's pervasive. So I don't think we should look at it either at a sectorial level or stage of investing level where the problem exists.
Correct. Yeah, fair enough. But Amit, tell me that how do you all conduct the process of investigation, especially at EY, if I was to ask?
So
How
the
does it
process,
happen?
right. So the process of investigation in these kind of issues can be, it can be very broad or very specific to that particular issue. If I take the broader approach, pre-investment, what people are looking at, like I couldn't agree more with Saket and Ankur that, very specifically people look at the backgrounds of people, because the backgrounds really define what you are. Are you don't become prone to fraud if you're ethical all your life, right? So we try to delve deeper and try to understand what the individual stands for, whether he has had issues in his past. So those kind of issues, right? Another thing is that most of the startups are young, they're growing. So the focus is more on growth, revenues, and then compliance takes a backseat. So like Saket was talking about the pillars. So people, don't have all the pillars. So that's why it's much more difficult to get actual processes and controls. And most of the startups, start with, you start doing business with family and friends, because not necessarily anybody is willing to take a credit risk on you. And then that becomes, more difficult to manage, because some of them take advantage. Some places you get alleged that you are doing business with related parties, they're all your vendors. So those kind of stuff. But when we go in, right, so in an investigation, as you would know, the first thing is about understanding the issue, then to try to understand what telltale signs will it leave, right? What evidences can we look at? And most of the startups have some evidences in their computer systems. So when we look at, if for example, a retail startup, what kind of sales is it having? If it's the e-commerce one, where are the orders coming from? Which are the IPs that the orders come from? Do they have sufficiently diversified, sales, or is it only from a particular pin code? Are orders being pumped in from the back end? So that gives you a sense of, what's happening. But most importantly, it's trying to, if you understand the business and you understand the business quick and well, that's the crux of doing a more successful investigation, and then understanding the evidences that come from there.
Understood. Saket, how is it at Kroll? Similar?
Yeah, so very similar. Obviously, the approach is absolutely the same. But based on my experience and what we do at Kroll, probably slightly different is a lot of times now when suppose an investor gets a whistleblowing allegation, rather than we suggesting to investor that start an investigation by doing the interviews, obtaining computers and so on, which is a standard process. Now, a lot of investors we are talking about is we are saying that why don't you obtain first the noise from the outside world, right? So you have a complaint, not necessarily you start an investigation, because a lot of time investigation, especially in the startup culture, where the organization is small, there are not many people, so it impacts business and so on. A lot of times we have seen that when there is an allegation that comes in, we try and collect the information externally to find out what exactly is happening in the startup. If the allegation, for example, is on, say, like Amit said, fake revenue, right? So there are a lot of evidences through source inquiries that you can actually obtain on the ground. And if those inquiries also suggest those red flags, which is mentioned in the whistleblower allegation letter, for example, then you actually get into an intrusive mode by doing a proper investigation. So that's an approach a lot of investors have liked, because it doesn't really suck up resources from the startup or from the investor side, right? So that's the only difference that at least I have seen, and we use it quite often.
Understood. Diwakar?
Sure. So So what we see is that we always say that prevention is sometimes better than cure. And a lot of times, I'm sure Ankur and Amit and even Saket will agree that most of the time when you have the investor agreements with the startups, a lot of times things are put in those as SHAs, shareholding agreements about regular sharing of the MIS and having an internal as well as statutory, even an independent auditor sometimes you see on those companies. So when all these mechanisms are put in place, how in practice, while it is all documented in the shareholding agreement, but in practice, how do you see those being implemented? Like, do the startups actually share the regular MIS, and do the investors question them, and even do they ask for regular updates from the independent or internal auditors who have been appointed, usually at the behest of the investors? So, Ankur, starting with you.
No, sure, Dagar, and great question. I mean, I just say that, look, investing, much like life, is about risk management. It's not the exclusion of risk, right? And that's exactly how sort of both of them are very similar as we relate it to ourselves. So I think as investors, obviously, some of these mechanisms are there in our documents. In the event of willful misconduct, etc., there are provisions that the documents provide, which sort of try to protect value, save value, whatever for the company and for. So I think the core of this is, as you rightly said, is about prevention, right? And I think if you are sort of vigilant when things are calm, if you're vigilant when things are going well in a business, I think that is what the discipline that it really instills when things go wrong. To that point, just as you said. It's about making sure some of the baseline expectations are actually met. So I'll tell you what we look at, as a fund, and I think the core thesis of our fund actually is to be more peers than investors, which basically means that we actually work alongside, the companies that we partner with in sort of helping them build, world-class, systems, sort of fit for purpose, vision in terms of where they are, how they should operate. And making sure that their thinking is geared towards trying to have a vision of building a world-class governance framework, even though some of it is obviously point of time things, and there is a roadmap, that is needed. What we sort of tend to make sure that we have very open mechanisms available to us as investors is making sure that there is a very robust whistleblowing process and framework the company follows, right? Because I think that's one source of insight, of things that are going wrong, etc., that we want as a board to bubble up, to us, right? The second thing, really, if I look at it, is making sure that there is external oversight, on the company. Statutory auditors, etc., obviously is one of them. Making sure that there is a robust internal audit framework, whether internal or external, not as relevant as making sure that the nuts and bolts of looking under the hood are done, within the company, both from an external point of view, though external only happens once a year, but internally on a more regular basis. The third part is really making sure that, we worked with them in setting up some core governance frameworks, right, of how they need to operate, how disclosures of related party have to happen, how things like conflict of interest, matters need to come up, to the board. Right, working with them in defining what's the best reporting principles, what's the best sort of structures that are most compliant and relevant from a law point of view, because tax is another area that you tend to see some of these things, going wrong. And I think the last thing on the MIS, piece is that, we as a fund are looking to build a fairly robust dashboard, right, which sort of helps us get the information from, some of the companies that we've partnered with. Be able to analyze them, look at them, side by side to make sure that we pick up early trends, early insights, and what can go wrong. And this is not just financial, information, but this is also qualitative information, as well. So something like, I'm just saying on the compliance side, have tax returns been filed on time? What's the status of, let's say your audits on the tax side? What's happened on your audits, on the financial side, etc. So some of those dashboards is something that we look at, and try to create a sort of a risk-rated analysis of some of the companies where we think, because of, let's say, scale of growth, hyper-scaling, expansion, multi-country businesses, etc., things have the potential to go wrong, and then proactively step in to try and see if we can help them navigate some of these things such that none of these issues, arise in the future. Having said all of this, look, if there is an intention, behind doing anything wrong, that only that much can tell you. And therefore, some of this proactive, regular engagement with companies, with founders, with the other members of the teams at some of the companies is really the only way we can get a good sense of a pulse of what's going on. So that's typically how we look at things.
Thank you. So, but we know that despite all our oversights, sometimes things do go wrong. And when they do happen, when you do conduct a forensic investigation, what are the things that is typically encountered? Like tax could be one of them. Tax, inadequate filing of tax, underreporting or over-reporting or revenue, depending upon the situation. Those sort of things can happen. So, Saket, when you do those type of investigation, what are the typical issues that you encounter once there is a whiff of wrong that has happened, something which is brought by either by the investor or by the external whistleblower?
So Diwakar, before I come to that question, I just want to continue with the previous one, and in terms of what are the defense mechanisms investors have, and now Ankur is on the other side, so I would also want to hear how does he feel about what I'm going to say about, right? So exactly like today, when I start conversations with the investors, I always say that rather than wait for a whistleblower allegation to come in, how proactively you can identify which out of your investments are potentially a red flag investment. So let's assume that Capia tomorrow Ankur invests into 20 companies. He talked about dashboard, and dashboard could have various indicators which will ultimately show out of the 20 that he has invested in, which are the 5 companies which are more risky as compared to others, right? And that is where again we step in, saying that let's assume that if the investor already has a dashboard, great. Otherwise, we help build the dashboard. We analyze, say, 20 data points, 15 data points, including change in management, change in auditors, delay in filing, all that Ankur said about, right? And then let's assume that we identify out of the 25 companies which are almost in the red parameter. And then again, the approach here is, obviously you cannot investigate the 5 companies. Like Ankur said, you obviously as investor try and give the management a holding hand. But that is where again we come in, where through our network of people that we have globally, how we obtain intelligence first from the ground again, out for the 5 companies, and then come to investor like Ankur and say that, hey guys, these are the 5 companies which showed a red indicator. We got the intelligence saying that out of the 5, actually 2 of them probably could be the one which is worrisome. And then you go and do a detailed investigation or a proactive review on those companies. So again, you're narrowing down, you're funneling from the 20 investors that Ankur has to 5, and then actually doing it to 2, and then that you can do it on a cycle basis. So that's again an approach that we have seen now investors generally adopting. It is not always an easy process, by the way, but once the mechanism starts, I think so investors are seeing quite good results at the end of it.
Sure. So Diwakar, if I can just add to that, I think look, fundamentally, whether we look at it now, whether we see it 1 year out, 5 years out, the responsibility to run governance and be a good governed company is always going to be of the founder and the management. Investors or the board, etc., will never be able to do some of those core activities, first principle things that a company founder management need to really be doing, right? Having said that, there is certainly a realization within the investment community as well, that we need to start now doing maybe relooking at some of the governance aspects, let's say at a board level, being more regimented around seeing, especially as companies scale rapidly, how can we, as investors and partners to some of these companies, help them, tide this time over, right? And again, I think and I don't think we'll ever have time enough to discuss some of these things, but why do some of these things happen, right? Also then drives this entire aspect of the next step of the investigation, etc. Some of these are, as I said earlier, some of these are done with intention. A lot of them are unintentional, and so on. So I think it's just important, and what we've all sort of are geared up at our end is to how to find a proactive way in which we can work alongside and support some of these companies as they grow. But again, as I said, principle wise, this is always going to be something that at a founder management level, companies will have to do as investors and as broader ecosystem. And I say this probably for Saket and Amit as well. The role that we can play from a prevention point of view is only educate them, talk about what can go wrong, what are some of the things that from our experiences we've seen companies do, and how to sort of prevent them. As I said earlier, again, investing and life both are the same principle. I mean, you can only manage the risk, and some of these aspects are all that you can do. Beyond that, on a daily basis, it's just beyond for the it's for the founder and the management to sort of set things right.
As you said, it's a lot of it also derives from the intent, and that is one of the key diligences that are done even pre-investment, like the intention of the founders. So, I mean, but sometimes in
intention
reality,
changes. Sorry, but I think on that, intention changes, right? I think as you go through conversations with, and I think Amit can obviously come in and be on our multiple side on multiple deals. I've seen that together in my previous avatar. But I think intentions change over a period of time. Why someone does it? Sometimes it's not about monetary. Sometimes it's about valuation, right? Sometimes it's about I want to be the largest in a certain space, and therefore certain actions are taken to get to that. Maybe there's no money moving out of the business at all by then. So I think intention also, Devakar, I think changes over a period of time. But again, the first principle, going back to founder mindset, his way of doing business, his own thinking around why he's doing something, and the vision that they start with. I think as long as for us as investors, we can stay core to that, and we can make sure the founders stay close to that and help him through the journey. I think a lot of this mitigation actually comes from there more than anything else. But Amit, again, I'm sure Saket, you guys have own experience there as well.
Oh, yeah. So Devakar, just to add to what Ankur said, it's not necessary that only startups have this teething trouble. Most of the mid-sized companies, even growing companies, have this trouble about getting MISs, getting all the data that the VCP requires when they invest. So that's not necessarily only at startups. Some startups have seen a fantastic data and quality and everything around because they have fantastic IT systems per se, right? So their things come out very well, but not necessarily everything has. And to add to the point around, not necessarily everybody is ethical first and then becomes unethical, right? The things change over time. Right. What we have seen is that most of the times, these startups are judged on different matrices, right? So the metric that the VC or the investor is looking at, right? Some of the times they have to game that. That's where the whole issue starts, right? Not necessarily are they taking out money, not necessarily are they doing the wrong thing. Sometimes they have to make sure that they can manage the environment. They have to manage the growth rates. They, cut corners somewhere, get certain vendors to do business with. So that's where the issues start. So not necessarily everybody has a bad intent, but not necessarily everybody has, good advisors in the context of, senior management board in that way. So that's where the issue starts in my mind. And then it expands. And when it expands, and if the person is not of the right ethical fit, the things can go really awry.
So a lot of these things are actually start with a sort of a short-term intention. For example, like Amit was talking. Saket and Ankur are talking about evaluation. And sometimes even in the non-startup, like the companies who are actually eligible for bank financing, even like in the bank to meet the turnover criteria to continue the working capital limits, we see companies overbooking their revenue or forward advancing their revenues just to meet the turnover criteria. So a lot of these things are very short term in play, but then over a period of time, things short term, then you have to show continuous growth, and sometimes, and that's where the trap comes in. So when you see that kind of situation, some of the times you can step in early to fix that. And so when you see that, what is the type of advice you generally give to the companies and their investor to take corrective action so that these things are mitigated right in the early stage before it becomes a big balloon later on, which becomes then difficult to control.
Or from our side, we say investigate. But Ankur can give the right answer. Means obviously, right? If there's such a big red flag that you are talking about, which you know about, then the only solution is that you have to have an independent party, probably who has the right skills, tools, technology to investigate on a serious note. And then also you get the lawyers at some point of time, depending on the issue, right? But sometimes delaying it doesn't make sense. But yeah, in some cases, hand holding, and Ankur can probably, give that right perspective. But sometimes that advice, that hand holding, that nurturing, obviously helps.
Right.
Yeah, no, so absolutely. So I think, I think whenever we've seen these situations, at least, and I haven't seen it from my investing career point of view, as yet. But I think one of the philosophies that we've been, talking to our founders with, and I would sort of, say that this is very similar to what I would do if a situation like this arises, is that given the fact that we are partners in your journey, whenever there are issues, challenges, things like that, just put it out there, right? I mean, there is no better disinfectant than the sun. Just put it out there, have an open conversation, and we have then the ability to help you solve for these things. Because look, beyond a point, these things will not stay under the carpet for too long. Something or the other will happen. There'll be a whistleblower. Someone will get disgruntled, etc. And this is a especially at the stage at which we come in, right? It's an implicit backing of the founder, and therefore an implicit trust that you look to build with the founders. So I think in our experience, at least what we've spoken about to founders is that any challenges, any issues, put it out there. We will do everything in our power to get the right facts out of that. And as Saket said, some of the right facts will either come through, core investigation. It will come through, sort of non-intrusive forensic like thing, which could be, let's say, looking at, IT systems and looking at their emails, etc. Or it could be, talking to the interfaces that they may have had in some of these issues on a no-name basis and trying to get insights as to what's really happened, which all sort of help, create a better decision, for us. For us as investors, look, sometimes it does become a 0 or 1 game in many. The outcomes are very binary, right? So it's important, for us to be able to make sure that we get as much of the facts as possible, dig in deep to get a better understanding of why something has happened, and then find a way to get to, with the company, their advisors, the founder, etc., to come back and to be able to address some of these issues, because anything that's left unaddressed obviously impacts us as much as anyone else, in this ecosystem. So I think it really has to be a very open conversation. Reality, while this is the ideal thing, it doesn't happen like this. A lot of times it obviously does get very combative. It does get, I didn't do this. I'm being accused of something that is not right. And I think, again, that's where, and I'm talking about this from my consulting experience more than, as I said, from an investing side that I've seen. But I think that's really where the quality of your relationship with the company comes in, but also the quality of advisors that you have who can help you navigate and address this issue, both from a forensic point of view, but also if things really go down that path, even from a legal perspective.
So that's where sometimes even the relationship between the founders themselves, sometimes if there are multiple co-founders, and the investors with the founder, that also kind of have an influence on the way the compliances and the reporting are done in the company as well. So what's your experience generally be around that? Is it sometimes you see those issues also impacting the governance and the compliances in the companies?
Yeah, so I can give you maybe a quick 30-second from my side, and Saket, Amit, please chime in. You guys have seen a lot of this. So I think, Devakar, certainly, I think anytime you have multi-founder, co-founder type businesses, I think one of the things that's relevant to us, again, and this has nothing to do with the topic that you raised, but the evaluation of, whether they are built to last, as a team, is something that we'll end up doing, right? So that obviously in many things outside of just their core first principle approaches, also how they engage and work together closely, and how they're able to, balance each other in building the organization that, that they're trying to build, right? There is a yin and yang in every sort of relationship from a founder, co-founder point of view that qualitatively we look to evaluate, which sort of helps us build confidence that, the team potentially has the ability to stay long, and therefore, sort of build a compelling business, right? And that's one of the first things that we look at a core principle level. Certainly, there have been cases, where co-founders have had issues, they've left many times. They themselves are probably whistleblowers in some of these situations, also. But I think the investigation part of that I'll let Saket and Amit address. But I think from an investor point of view, we take some of this obviously very seriously, because again, it fundamentally shakes the basis of your investment. Because again, it is a very founder-led, founder-first investment thesis that all of us at early stage build. So I think we do go back to analyze, what's gone wrong, why some of these things have happened, and obviously sharpen our own thinking around some of these topics from a co-founder fit and evaluation point. But Amit, maybe Saket, you want to address the investigation piece of this.
So just to add there, most of the times we check what is the equation between different founders. Like Ankur was saying very correctly, we see whether they can work together. We see what are their priorities, which are the areas that they get involved in, what is their ability to, navigate through difficult circumstances, what is the path that they have taken. So those are things which we look at very closely during an investigation, and then find evidences about these things. So, trying to see whether somebody circumvented a process just to meet a quick deadline or to do something, right? So those are very telltale signs of what is going wrong. So that's what we generally focus on. And in addition to that, what does the general ecosystem around the founders, what are the different stakeholders thinking? That also gives you a very good view around how they operate. So that's another thing that we look at.
And just on a lighter note, I think so, while there are fallouts among the founder, it is bound to happen, right? It happens everywhere in life. When you get married, the girl from 15 years before marriage, but still there are divorces that happen.
I think Saket.
Saket, the screen is frozen.
Okay, so while we wait for him to come back, Radhika, you want to take up the next questions?
Yeah. So my question was to Ankur as to at different stages, I'm sure there will be different kinds of scrutiny that might be involved into a startup. So as an investor, what would you expect a founder at each stage in terms of disclosure?
Well, I mean, I think honestly, the simplest answer is he should disclose everything that he has in his mind. Because I think, moment you start to apply judgment to is this relevant or not relevant is, I think, where things tend to go wrong, right? And I think so that's, and if you think about conflict of interest, related party transaction, people try to get very technical. I'll take related party as an example, right? People try to get very technical with what is related party. So there is a definition in law which people start to follow, that this is a related party. I'm disclosing this to you under this because of this law. Anything outside of this law, I will not disclose to you. Now, when I'm taking this from a very layman point of view, I'm only trying to ask a question outside of law, which is to say, do you do any business with your friends? Do you do any business with people who you know for a long time? Maybe your distant relatives, right? Or people who who through your network very well, and there's a social equation or whatever. I'm indifferent to what the law says. And why am I asking this question? Because I just want to know within your ecosystem, what's the comfort zone of operation that you have, maybe with your customer, maybe with your vendors, etc. So to your point, I think the idea is anything that they feel is a gray area. My advice always is better to be open about it, explain it out fully versus try to find definitions, because that's where the misunderstandings tend to happen. Now, having said that, I think again, different stages of a company, the level of disclosure, the level of materiality, etc., always changes. But again, I think anything which is a first principle disclosure of right or wrong, I think we always, in fact, advise, and not even advise, insist that our partners in this journey are open with us and tell us tell us reality, because that's the only way we can help them, out. It's like going to a doctor in many ways, right? If you don't tell them what your problem is, they'll ask 5 questions around it. They will connect 3 dots, and that's the prognosis that they will come up with. But that is not always, the right conclusion, as we all know. So I think that's really the thinking here. I think just go out and disclose as much of the gray, as much of things that you're uncertain with. And we are only here to help, honestly, much more than them. Because as I said, I think for us, it's not just that our name is on this. It's also the fact that our whole mission is to build good businesses. And I'm saying this for all investors. I don't say this for ourselves alone. So, we need to be part of that mission. They also need to sign up to our mission of working together and creating value, in the ecosystem. So honestly, I think the simple answer is disclose everything. There is very little value in trying to hide facts or try to, deflect on information.
Got it. I'm also very curious to know as to what happens when you come to know that your money that you pumped in was used for some unfair practices. What kind of clauses do you have in term sheets that you sign with founders for these kind of protection?
Yeah, no. So I think, as I was saying earlier, willful misconduct and situations like that are very, very clearly spelled out in most transaction documents, right? Including the process that will get followed, including an independent investigation, including things like, if any equity has to vest to them, that not vesting, that coming back to the pool. So there are many of those. But I'll tell you, Radhika, I think the core, if we are already getting to a stage where we are now trying to enforce the contractual rights, things have gone dramatically wrong already. So I think the endeavor in this, and I know that's obviously what everyone aims for, is to find a way in which you proactively protect value, through that. But yes, there is enough legal rights, etc., that you have. Enforcing that, proving some of these things, and again, Saket and Amit, I'm sure, have a lot of insights on those topics as well, is another matter altogether. It's not as simple as, the legal language around some of these things sound. What is willful? Who did it? Direct, indirect? There are just too many layers within this that complicate the process of enforcing these rights. Rights are there. They're meant for protection. They're important. But at least the core thesis for us is we should bring the entire risk management, framework further to actually having to try and, execute on rights. And that's really the endeavor that honestly we have, at our end. But I'm sure Saket and Amit would have seen many of these situations and the complexity of enforcing some of these legal rights that comes in situations where there is, clearly willful misconduct.
Oh yeah, it's very difficult to actually enforce these because you need to get evidence of all of these, right? But what investors can definitely do is to actually look at what are the different metrics that they have put into the agreements, right? Look at the growth percentages, look at the potential events of default, look how, and identify if the startup or, your investee company is actually gaming those. So look at that, pay attention very carefully to those. And rather than just looking at the MIS and other aspects of it, try to go, to the office once in a while, try to test the waters, try to, kick tires and ask people what they are doing, what are the kind of controls they have. So that is very important. Being real, and most of the VCs actually do it, but looking at it from a compliance standpoint, looking at it from a control standpoint is very important. And as Ankur was saying, nothing beats the trust, right? If you have the trust of the promoters of the startup, that's where you will understand whether they're telling you the truth. And then anything that they tell you, right, with the right context, will make sense.
So extending that, Radhika, I think, we've heard many people say that some of the situations that have arisen in the past have arisen because investors have changed the goalpost, right? Of, we wanted you to achieve one thing, now we wanted to achieve the other thing. I think that is absolutely incorrect, right? None of us have, as investors, and I speak for, again, everyone here, no one has moved the goalpost on honesty. No one has moved the goalpost of being, following the best truthfulness and the principles that you have to follow. Now, when we talk about metrics, growth is a metric for a certain point of time, for a certain scale of business. Profitability, cost management is a different metric for a different point of time. Those are not different goalposts, right? Those are priorities. And I think a lot of times people tend to misplace the understanding of the two. I've heard many times people saying that, investors have changed the goalposts. I think that is, again, not right. I think as a founder, what your true north is your true north. I, as an investor, do not and cannot have the ability to change that under any circumstance, because then, if I can, then anyway, it was never your truth. So I think that's, I think, is equally important. And again, that also leads back to the point I made about openness and trust. And again, what Amit, just underscored as well. If a metric has changed and you're now trying to look at a different metric, which either you believe is right, and therefore you're following it, and if it's wrong and you're still following it, again, for companies, founders, management, that's the right time to have a conversation with your investors, to have a discussion with them and work with them on the need to do this and why people are doing this. One of the simplest ones in the last 6 months, especially, people talk about is cost management versus 2021, which was about growth. I don't think the two are necessarily different. What people are talking about of cost management is growth with an eye on prudence of spend versus growth without that, right? I think it's just bringing more caution to what the market today has and a different lens, but it's not changing the goalpost. Just the limited point I wanted to make.
Yeah, I mean, thank God you put that across, because everybody is like, we did this because we had pressure from investors to grow and show profitability on our books, and we didn't know what to do, so we just committed the fraud. So very good to hear from your side. Saket, how about you telling us in your investigation processes as to what kind of advice do you give to your investors who approach you for any kind of wrongdoing that has happened to them in their investments?
Yeah, first of all, my previous conversation on arranged marriage and love marriage was probably not taken well.
Please complete that first. Yeah, it was very interesting.
Okay, so so again, the advice to investors, like I have been saying, once it is, once you have enough on your hand where something has gone wrong, our advice again is that investors should dig in deep and not just look at the surface level, because a lot of times we have seen that when you enter with thinking that there is an X problem, but you come up with X plus 10 problem. So again, having a lot of times we've also seen investors having that narrow approach. So again, our recommendation is have a comprehensive approach in terms of areas that needs to be looked at, because a whistleblower probably would have, say, raised one, because that is what the whistleblower knows. There could be 5 other things that might be happening if that one is true. So how do you get comfort that you don't have to look into those aspects? So again, approach to an investigation specifically in terms of identifying the areas for investigations and the employees that might be involved, including the management. That becomes, I think, so a extreme critical piece of discussion along with the investor, along with the law firm, if the law firm is involved, along with what the SHA for example talks about. So everything has to be taken into consideration. But I would say that is one area that normally we sit with them and actually think through in terms of what's the best approach. And like I said, I might be sounding repetitive, but again, the approach is, like we said, do you directly want to get in the company and start an investigation, which could be intrusive, disruptive for the operations, or you first want to get some more additional information, be sure of what you are going to look like, and then again, that could help you in your scoping bit as well. If you are still wanting to an investigation in terms of is it X or is it X plus 10, that way. So that is my recommendation. Yeah.
Got it. Amit, as far as your experience is concerned, if you could tell us about different kind of frauds that you have come across, and how do you carry out investigation in each one of them? How do they differ in different cases?
Right. So the most common is, obviously when we are looking at startups, it's management fraud, either pre-investment or even after post-investment. So there are 4 or 5 things that they end up doing, right? So inflation of revenues and overstatement of customer numbers is one of the first things that we end up looking at, right? Then pushing out costs. So are there costs which get pushed out to the next year or otherwise, or they are held in other books of other companies which are associated with the promoters. So that's the second one that we look at. Then we look at circuitous transactions, right, through related parties. And like Ankur was saying, we're not talking about related parties as defined under law, but related parties who's like, uncles, fathers, chacha mama ki company, those kind of things, right? So are they buying, selling through these entities, right, to increase their revenue? Then we look at specifically, have any of the business practices changed within 6 to 9 months prior to the transaction? Because not necessarily I'm saying that investment bankers and other people train the startup, but these people start reporting certain things in a particular way, right? There is a process of preparing somebody for funding, but that is where they normally start maintaining good data and other aspects. But most of the times we also see that some of these are taken the wrong way. They look at, they make sure that I repeatedly am saying that they make sure that the metrics are right, right? If somebody is looking at the, some same store growth or growth in new areas, so they try to manage that. So trying to understand whether the metrics have been gamed so that, the investor looks at things correctly. So those are some of the things that we definitely looked at. And, investigating these is, quite complex, right? But one element of it is trying to get information, like Saket was saying, from the ground up to see what's happening. And the second thing is to look from the accounting records and the computer systems. So we try to match, the primary accounting system with the underlying data. So if we go into, say, a retail store, we might see the ERP versus the point of sale, right? So if there are disparities in these, or if their credit card machine collections are different from what they reported in the, as per the point of sale or as per the ERP, that those are the differences that we find out. We speak to, the suppliers to see whether they have been promised that whether they have been supplying goods at a cheaper rate at the promise that they will get paid from a third party entity. So those kind of things we see. We try to see if the buyers and sellers are related in any fashion, right? Just to see whether they are related entities and are there circuitous transactions just being done to increase, revenue. And then we look at low margin transactions. If there is a, business where a certain part of the business is done at lower margin, why is that so, right? That's essentially done only to shore up revenue. So those kind of things we look at, and then we look at how the relationships. And one big softer aspect that we didn't touch upon through this whole discussion is trying to understand the culture of the company, right? In addition to what the promoters, think, right? There is a culture of the company which is very important. So what is the tone at the top? And now the tone at the middle is very important. What is the tone that the senior managers and those second level below the CXOs are setting, right? Do people feel comfortable coming up and saying that things are going wrong? So what is the tone there, just to see what kind of things bubble to the top? So those are various things that we end up doing.
I think it is as much an art as it is a science.
Right.
Forensics is as much an art as it is a science, for sure. And as Amit rightly said, there's just so many things that can go wrong. I think there is no one-size-fit approach to any of these investigations. And between the three of us together, we've done many in my previous avatar as well. But honestly, there is just no single method that necessarily picks one to the other.
Right.
So as I said, I think it's as much an art as it is a science, and quite interesting in terms of how these guys try to piece things together to really build a hypothesis, and then the difficult part of proving it obviously is where the challenge lies.
So,
Correct.
So related question, Ankur, is the role of the statutory auditors. When you're investigating, when all these window dressing happens, the role of the statutory auditors then become more important. So how do you see that their role play out when actual forensic investigation does get conducted in the company? Because statutory auditors essentially are the ones who are signing off on the financials.
Yeah, so at least given, I guess the three of us have an accounting background as well, I think whenever we started our careers and we were going through our education, I think we were always taught that, and Amit, Sakit, correct me, I may not remember it fully now, but auditors are not bloodhounds.
It's a watchdog and not a bloodhound.
One of those things.
It's a watchdog and not a bloodhound.
Not a bloodhound, right. So I think, look, so let's step back. There is a certain role that a external auditor or statutory auditor has to play. Certainly, they have a responsibility to look at the processes that the company follows in its reporting, in how they prepare their financials, the policies that they have, the disclosure principles that they follow, etc. But their work is governed under a certain framework within which they have to report. So certainly they are important eyes and ears for investors, for the external ecosystems, for the regulators itself. But the onus again of identifying fraud is not on them, or not solely on them. And again, I'm repeating myself, but look, at the end of the day, we need to remember it's the management which has the primary responsibility. As a board, you have oversight. As auditor, you have a fiduciary responsibility. The shareholders have appointed you to conduct an audit under a certain manner process, basis which they have to report. A lot of times, I think there is a lot of criticism of stat auditors that they should have caught it. But look, if the intentionality with which something has been done and the sophisticated manner in which some of these things happen, actually it's very difficult to pick these up in the course of a normal process. Secondly, a lot of these things also come through from areas that may not be typical of a financial audit, right? So let's say, let's say, operating kind of things, right? Let's say your user numbers, your user bases are wrong. Your DAUs and MAUs are overstated. You've done some of those sort of things. There are bots that are running through, the system trying to create traffic, etc. Now, that's not the purview of what an auditor, typically does. Their purview, even on IT controls, is limited to financial reporting, etc. Versus a lot of these things will probably happen in other areas. Should they have an eye for it, and do they have an eye for looking for these things? They certainly do. But I think it's also to do with the reporting principles and the financial reporting areas that they look at versus broader. But again, Sakit and Amit, I know this is a question that's asked of all of us many times. So love for you to sort of quickly contribute this as well.
So very quickly, statutory auditors and auditors generally are not necessarily geared to find fraud, right? They don't have the training to identify fraud. And like Ankur said, they're only looking at financial fraud. And that too, if the materiality brings it to the top, right? So they are essentially doing a test of controls. They're not looking at each and every transaction. So one is materiality. It is about true and fair and not true and correct, right? Books. So that's the limit with which statutory auditors or even internal auditors operate. So that's something that you should bear in mind.
I mean, they do find fraud sometimes, Divakar, but again, that's not the primary core purpose of
not the primary
intents of what they are doing. So yeah, I think sometimes the requirement, the process, what they are doing versus the expectation of fraud, I think are slightly divergent. Sorry, Sakit, I think you were adding something.
No, I was just on probably the last point on that Divakar, global statistics says that only 4% of the frauds globally are identified, not startup, but globally 4% of the frauds are identified through an external audit. We talked about whistleblowing mechanism being, tips being the highest in terms of how frauds are identified globally. And that is in the range of around 45%. Second comes to internal audit. So like Amit said, some of the auditing procedures are not built to identify frauds. And that is where, and second point I wanted to say, when investigation does take place in a company, again, be it startup, non-startup, established companies, auditors again have started playing a very important role. They are almost a stakeholder in this, where they would want to get involved to understand how the investigation is going on, what is the scope. A lot of times they have inputs in terms of scope, because going forward they have to sign the financial statement. So again, they become in certain aspects a very important stakeholders who has to be included when the investigation is being probably put together and so on. The team is put together and so on. Yeah.
So Radhika, for your closing comment,
I think
we're out of time.
Yeah, we are running out of time, but lots of questions are still pending, and I'm sure that it deserves a second session very soon. And we'll look forward to that. But thanks a lot for your time. Thanks, Amit, Ankur, and Saket for being there and sharing your insights. Really loved hearing them. And thanks a lot for the time that the audience has given us today. We'll see you super soon in our next session sometime.